Hello, everyone, and welcome to Now Next Later for Monday, January 19th. Thank you, as always, for joining us live. We will be posting this to YouTube, and you can share that around and hopefully get some clips and some insights. I know we are very excited to have today's conversation. Christy Soukhamneut is here. Christy, thanks for joining us. Sasha, good to see you on Now Next Later. How are you doing today?
I'm doing great. How are you guys?
Excellent. We're well, thank you. Christy, how are you?
I am good. It is warmer today than it has been over the past week. And so I'm actually excited that today might be a day to venture outside.
There we go. Test out winter in Texas. Well, our friend Brian View was posting from the MISMO Winter Summit and explaining it was colder there than expected. It sounds like you just kind of took that home with you to Texas.
You know, it was funny being down and they picked a lovely place for it, Amelia Island, and you think warm, sunny, and that was not any of that.
It's the roll of the dice at this time of year everywhere. I also bring it up because it is a topic of interest for us today on Now Next Later. We wanted to pick your brain, see what you heard, and dive into data in both the industry trends for the year, but also at a granular level. So I'm glad we're talking about it straight away. Maybe you could give us a quick overview and then we can dive into some of the specific topics of what were your takeaways, what were you hearing in the hallway, what were some of the things you saw at the MISMO Winter Summit.
Well, this was my first MISMO event. MISMO has always been kind of this thing that was around the periphery that other people did that I didn't do. For whatever reason, how some things you just kind of get hooked into and you go along and you do them and then you get active and engaged. And this was my first MISMO. And so that's thanks to obviously Brian View, who said, hey, let's grab some new folks and get them in the room. And then he had to prep us for how the conference is different. It is a summit versus a conference. So it's not your traditional, show up, have 1,000 meetings with people, and then hopefully you get to grab one or two of the sessions. People are in the sessions. People are listening and doing the things. And then there are all these working groups where you actually talk about what's been happening in the industry, what needs to happen. And because Brian is new to his post, and might I say, he was really the perfect choice for what's going on in our time in our industry and bringing that to MISMO. So there, as I understand it, again, my first one, but as I understand it, there were a lot of, first timers like me that had never been. And so you had this really diverse group of people across tech and compliance and operations. And then you threw a few of us on the origination and sales side into it. So it was a great group.
Oh, I really appreciate hearing that. That sounds like a great group. It sounds like also bringing that sales perspective, that dynamic nature of the business into the nuts and bolts of the business and try to influence both sides with that perspective.
I think absolutely. And what's really interesting is you sit and you think about where we're headed. We have had so much change in our industry, more change in the last 5 or 6 years than I think we've had in the entire time I've been in the space. And that topic of conversation actually came up with a few of us as we're sitting around talking about just kind of the differences. And it's not that we haven't had change, right? It's not that things haven't improved, because I don't know any of us that still have rubber thumbs on our desks as we flip through. We're not putting things into ACO fasteners. But the time that it took us to change from that to, electronic files to the things that we're doing today, the time frame is shortened. Like, we're moving a lot faster. And what comes up for me for that, and this came up at MISMO, was regulations haven't kept pace.
Agreed. So one of the things that we talked last time you were here a lot about was really like the order of operations, process management, and change management. So it sounds like today we'd almost like to talk about what you just said, kind of the fuel, the raw materials of our operations and process, where those come from and how we think about it. Was there a particular regulation, or was there a particular piece of the regulatory landscape that stands out as kind of the primary thing we need to shine a light on to move forward in the near future, or is it more across the board?
Oh, I give you 3 guesses.
Okay.
And if you don't get it on the first one, I might be disappointed.
Yeah. Well, I mean, I was going to say consumer data, permissioned consumer data.
Well,
Sasha?
I think, Sasha, what would you say?
I actually probably would have gone that route too.
Okay, so I think that falls into it, but it really was the topic of AI.
AI, sure.
And right, like an AI encompasses consumer data. It encompasses all kinds of data.
Mm-hmm.
And it's really been the hot topic for the last few years. And the topic really didn't go to, is AI taking our jobs? Because it's clear that it's not. It's clear AI is here. People are still here. And that still has to be the case. However, there's a lot of concern about the regulations around AI. And different states have different regulations. The federal government is proposing things. We're already a heavily regulated industry. And how are AI regulations going to change what we do or how we do it? And maybe those regulations need to be for other industries, and we need to figure out how AI fits into the current regulations that we have.
Yeah, that's a great way to think about it, because we've always in this industry, even before AI, struggled to document and articulate which engines, which SaaS technologies are doing which things. And I always felt like, especially coming from the legal side of the industry to start, that it was really important to be able to clearly tell your team what to say externally, particularly to regulators, around where systems make decisions versus where they're just doing more infrastructure upgrades. And I feel like AI is now sort of really exploded that problem in the sense of it's getting fuzzy or tricky to say, what does a decision mean? It used to be, this engine makes decisions versus this engine just processes work or assigns work. Now, what is a decision is even kind of a tricky area. So I'm not sure what the primary topics you heard, but I'm curious, like, I've not heard any mortgage lenders say that AI is making any real decisions yet. It's more tools and solutions, but maybe that area is blurry.
Well, let's go back to the beginning and kind of level set for maybe folks who weren't in the space during this period. When I got into mortgage lending, one of the things that they ingrained into you as a loan officer was that you could not make a lending decision. And part of that came from the regulations that you really weren't authorized, right? Only underwriters were authorized to make lending decisions. Well, what did that mean? So did that mean if a person walked in with a 400 credit score and no job, that you needed to take that application and send it all the way to the underwriter to decide? And by the way, that is kind of what it meant. It meant it had to go to the underwriter, even though you could clearly look at the guidelines and go, dude, you've got no job. That's kind of a necessity to buy a house. You got to have an income stream. And so at what point is it actually a decision, or is it a rulemaking that says, hey, here's the barrier? And I think that we're having to have that conversation again, because we've come to a point from an economic standpoint that we can't afford to process loans that aren't going to go anywhere. And so loans that we know don't meet the guidelines, when should those be cut off? And does a human actually have to do that? Does it actually have to go to an underwriter? So like, Sasha, I know you just recently moved. And so as you were going through that process, where do you think the human should have been in the loop for you?
Well, I'm renting versus buying at the moment, so a little bit different. But I hear what you're saying, and I am curious to think, like, are there conversations that are already happening around looking at current model of when and how an adverse action is taken, and what would be different if AI was involved, and how far AI could or should be involved?
Yeah.
It's a good question.
Yeah, because I think of Rocket Mortgage, obviously I'm biased having been there at the launch, and the few years after. But that was a consumer-driven experience where there wasn't AI in 2016, but there were decisions that informed the consumer, here's what you need to have. So similar to hitting submit without filling out the checklist, you can also add guidelines to that checklist and say, would you like to pull your credit? Consumers were clicking yes. And then the results of that were seen directly by the consumer first, and then they could decide to proceed or not. And so that is kind of where my mind goes for, can we think about AI the same way without tripping a regulatory thorn? But I don't know.
I don't know either, but at what point should the consumer bear the cost for deciding to move through that process? You know, I don't get to go to any other, you know, entity and move through a process and not have to pay. And again, you know, now, next, later, a lot of things that were true in the past are kind of coming back up. It used to be that consumers had to pay for their credit reports up front before they could be pulled.
Yep. Yeah, and their appraisals in many cases too. I remember refi processes including both of those things to say, we know this customer's serious, or their intent is sound. If they're willing to put the credit card down for the appraisal or the credit or both, then we know we've got a loan application here. So that's a great example. Bringing that back today would feel completely different, I bet, to the organization and the consumer, given the current landscape. But everything old is new again in some ways, right? So it's not impossible. We've done it before.
Oh, we absolutely have. And when we think about, you know, when we think about AI and the way that it goes into things, and we think about how we need to progress, you know, I think this brings us back to the data, because technology of any type really highlights our flaws, because we don't ever want to automate or use AI for a bad process. And so there's some work that we have to do around not only our processes, but our data. Does our data really talk to each other? And so when you think about going out and saying, oh, I'd love to integrate this CRM and this point of sale and this LOS and this thing for retention and this thing for, you know, whatever it is you're going to do, if there is not a common standard way to think about things, my favorite example is borrower name. So if I say borrower name, what does that mean to you, Jeremy?
Yeah, it would be the name they put in on their application. What's on the 1003 borrower data field, right?
Well, but does that mean first name? Does it mean last name?
I was going to say first name, last name was what I would have answered.
Right? So, but what about nickname? What about legal name?
Yeah,
Like,
right.
Of course.
What about all alternative names that you have? Do you have a maiden name and a married name, and you still use both for whatever reason, right?
And so if we don't have that common standard data set, which is really what MISMO is kind of focused on, I think today some people think MISMO is optional, right? I might have been in that camp before going and really sitting down and having the conversation, and having somebody like Brian, who has been both on the lender side and the fintech side and been in the industry for a long time and been highly active, without the explanation of thinking about, this is how we communicate, and we've got to create this language in order to do it. Now, how do we do that? The good news is we have this infrastructure over here called MISMO, and it has been something that not all of us have been actively engaged in. So how do we get more people engaged in it, and how do we get the right funding for it so that we can create that, so that all of our technology works together and we're not spending and wasting money, right? This moves back to the conversation we've had many times around the cost to originate. Could this reduce the cost to originate in a way that's meaningful, because our systems know how to talk to each other?
Yeah.
Christy, there's so many things that MISMO has done over the years and I hope will continue to do, especially with Brian at the helm, with great confidence there. Was there talk about how to prioritize? Because there are many gaps still, and I don't think Brian would disagree with me on that. And so if you think about it, obviously you probably have multiple working groups and can tackle a few things at a time, but can't necessarily boil the ocean. So were there topics where it was very unanimous amongst the group of like, hey, these are the 2 or 3 things we really want to go after first?
I think that depends on the group that you were in, right?
Okay.
Because they had multiple groups going on kind of at the same time.
Mm-hmm.
And the buzz I kept hearing in the hallways and at lunch really revolved around AI. People see that as a way to increase efficiency. They see it as a way, it's here. We've got to figure out how to do it. Okay, well, don't go back and do some of these things. Again, particularly around that data set and defining what things mean, then how are we going to move forward in the future? We're just going to have this sloppy mess that doesn't live up to the hype.
Yeah, I was hoping I could give you a scenario that I've been playing with or thinking a lot about that hopefully gives us a granular view in, but allows us to speak to this data source, data usability question among all your systems. And you listed them a second ago: POS, CRM, LOS, recruiting, analytics, what have you. And the question I was thinking about, as we move to source data, particularly for income and assets, I think with employment being a fast follow, we have a unique opportunity, particularly on the MISMO format and Rails, to standardize a lot of how that gets consumed and transferred in the industry. But we also mentioned the cost, and it feels to me in a purchase context in particular, which a lot of people are thinking about for the coming year, that it becomes very hard to shop for a consumer when you have to connect your bank account in order to get a true loan estimate, in order to get true pricing. Everything else is really notional, in my opinion, until you give real data. You can guess and you can offer your loan officer some insights and they can run that. But the reality is that's not real pricing, and we all know it. And so if you are truly going to shop, what's the incentive to turn over all of that data directly into my accounts more than once? Because it's kind of painful still, even with source data, logging in, transferring, waiting for the LE to come back, comparing it. Do you have any sense of whether, well, I'll ask one question at a time. Do you have a sense that's a real problem for purchase single source data use up front to get an accurate price?
Well, I want to address one of the things you said. You said everybody knows this. Well, you know it, and Sasha knows it, and I know it, and Brian knows it, and let's name 100 people in the industry, and we all know that it's not really worth it until we get that information. I don't think the consumer knows it.
Mm-hmm.
And I don't think that they understand the difference in what can happen. And that's where you see some anger come in from a consumer. Maybe not as much anger as people had at Verizon, last week when nothing worked. But there's still a lot of confusion, at least from a consumer, because they don't realize that risk-based pricing is really based on all of these different things, and one tweak can change everything. So
let's be honest, they don't know what risk-based pricing means.
Oh, now come on, they've been watching TikTok and they have been educated. So they at least know the term and they're talking to you about it. But you're right. It is the consumer is not as educated as the folks in the industry. And even sometimes the folks in the industry, we get pretty siloed into our side of the business, which is why, again, I'll go back to, it was great to have so many different pieces of the business in the room to talk about it, because oftentimes we'll solve a problem in one area and we create a bigger problem in another area. Right now you think about what's going on in servicing, and we've just now had the restrictions or the extra things that you could do from COVID to help people stay in their homes, right? Those have all been changed. And so we're going from being able to do a partial claim every 90 days to a partial claim every 24 months, and you have to have a trial payment. That's going to be a big shock to a lot of consumers. And they're not going to know what to do with it. And then that's going to turn around and have an impact on originations, because these folks that got current, that did the things, it's going to impact the ability to qualify for loans. It's going to impact the number of homes that are on the market, because maybe now they go into the foreclosure process, right? You know, your crystal ball may be better than my crystal ball, but right now what I see is a bunch of stuff getting thrown in that we don't know how it's going to turn out yet.
Yeah, that's exactly the kind of challenge that I think we hear a lot of tension about, because even the framework to make that decision comes down to so many variables. And that's one of the things that's made this challenge fun for Sasha and I to dive into, which is how do we decide which piece of that to tackle first? And it sounds like what you're saying is one of the best things to think about, particularly for lenders, is who you send to the table, where and how you get people around the table, both internally and externally. And I think I had always had probably the false assumption that like the big incumbents set the table, so to speak. And now what we've seen, I think, as a trend in the last, call it 5 years, is new technology companies coming into the industry to challenge big incumbents, but maybe without that insight of MISMO or what an organization can do to learn about all the other pieces they're about to disrupt.
And maybe that's why they don't get adoption, because
right.
They do create that disruption that is not a good kind of disruption. But you also think about what's coming down the pike. Like, we all know about the new appraisal changes, or maybe we don't all know. I'm going to make an assumption that we all know there's new appraisal changes, and you can adopt them today, but they don't have to be adopted until, I think it's November. And that data set for appraisals is going, I'm going to make up some numbers, but this is directionally correct. It's going to go from like 300 pieces of data that you had to submit to like 3,500 pieces of data that you have to submit. That is going to create an entirely new issue for appraisers, for homeowners, for lenders. You know, when do you adopt it? Is it really going to be adopted when the agencies say it's going to be adopted? And there's a lot of belief that it's going to get pushed. There's equally as much belief that, hey, this time they really mean it. We're going to have to adopt it by November. And is anybody ready? Are our vendor partners, are our appraisal management firms ready? How are they talking about this? How are they educating folks on what the new process looks like? And then, I mean, let's not forget, how are we educating the homeowner that this is what it's going to look like, and it's very different than what they experienced the last time they did a loan?
Yeah, I think that's a great example, because when I started to scratch the surface, and I've only now begun to deep dive that exact issue, I discovered that many of those new fields were either free-form text boxes or combined. 100 fields in the new form were one field in the old form. And now we're getting to the point where we want, need, and can utilize specific mapped data fields because of what that can mean to QC or value or property risk or all of the different benefits that cascade from getting formatted data in fields that we can all use and know what it means, know the definitions and know what it means. So that's a great example, because a lot of that data was there, but it wasn't there in a way that the machine can consume it. The machine of RMBS can consume it. And now we're getting there. And so the potential benefits or consequences of that are unknown until we start really slicing and dicing the data in a way that we hadn't been able to before.
Well, and does this mean differences too? You know, again, you think about where the business was, and prior to the great financial crisis, very few lenders sold direct to the agencies, right? It was only the bigger ones, and most of the smaller companies sold to aggregators. And today you see that as being very different. You see a lot of folks selling directly to the cash window. They sell on a flow basis, and they are selling direct to the agencies. And does that change because of the way that the industry is moving?
Yeah, I think this is an area I would love to talk all day about, because I think that the difference between the person and the house is underestimated in our industry. And what I mean by that is, I think investors that are not the agencies, but even the agencies to some degree, are really cautious about how much of the process of seeing personal financial data being underwritten they want to know about. We have data to expose real-time underwriting to investors today. We could show them how the sausage is made, and we could do things like validated and verified data capture. We could do things like tokenize the data, things that would give investors a real-time view into underwriting. The question we don't know is, do they want that? Because it can be really messy and it can change a lot over time. But my counter argument would be, with the house itself, they've relied forever on moment in time human appraisals. Like literally, that's the way I would describe it. And now we're moving to dynamic and trended data on the house. And I actually think they do want that, where they're not sure how much of the mess they want to see on a consumer's underwrite. I do think investors want, tell me more about the risk here, the property risk. Taxes and insurance has become a major issue in the secondary markets and in the capital markets. And so things like that, I think, are interesting. Do you see that trend expanding? Do you think that's an accurate view? Kind of what's your take on that for this coming year?
So I will say that I was very pleased that when I called my homeowner's insurance company, because my insurance went up, and for whatever reason, I couldn't pay the bill. It was a really weird glitch in the system. So I had to call him. And the guy was so helpful, and he helped me not only get it back down to no increase, he actually figured out how to get me a $200 a year saving. I was super stoked. I may be the only person in the entire US that has had this experience. Everybody else's insurance has gone up dramatically. And, so like, I want to get on my knees and say a little prayer and thank the God above that this is what has occurred. But we have long had, except for the great financial crisis, house prices that have pretty much just continued to increase at a steady pace. You didn't have to think about the collateral. And now, depending on the market that you're in, you may be starting to see some decreases. And with the changes that we're seeing on the servicing side, it may be that we have to push some homes to foreclosure, which we have not done since 2020. So that means that the collateral may be worth less. And this would be the first time in quite a long period of time that investors are having to deal with that. We also have new products out there. The home equity appreciation, shared appreciation products. And if we're having a shared appreciation product, you're making a different kind of investment into that property than you were when you just lent money on it, because you're betting that the house goes up in value and you make money off of that, as opposed to you're just getting to clip a coupon on the mortgage interest rate.
That's right. The direct exposure to the asset value as opposed to the lendable risk is a big difference. And I had long been an advocate of really dissecting down payments, because my argument for a long time was that at some point historically it flipped from the consumer's skin in the game, proving their ability to save, and it became a lot more about just a buffer on value. And it wasn't really about proving anything as a renter to a homeowner. It somehow became, we don't really love the insight we don't have in the industry, so we're going to just put in that 5 to 10% buffer that is your equity. And I think what you're saying is that's now been totally changed by new products and certain markets that have accelerated so quickly in value that we got the new products or we got a new risk profile. And so now we have to think about that in really all contexts, but particularly, wait, who did that in what markets and now can't pay their mortgage, because that changes the liquidation.
And I think about like my partnership with Sasa and, her team over there. They're great at sending us data. But one of the things they're really good at doing is also sending us insights, because a lot of times we get data and we don't know, what the heck to do with it. We get this data and it's like, great, that was cool to read. I'm glad I read it. Now what do I do? And I think we have to start thinking about data, not just in terms of getting it, but how do we actually use it and implement it in ways that we haven't in the past, using it to be more thoughtful about the future, looking at the macro and not just the micro, right? Underwriting is about the micro, but what about the macro? Now, there's some things that legally we aren't allowed to do and from a decision-making standpoint, but when we think about how we manage our portfolio, how are we using that data? Where are we getting it from? What are our partners bringing to us? Which then ties back to that whole great data set that we were talking about at the very beginning with MISMO. Well, if it doesn't mean the thing you think it means, then you might have adulterated data that isn't giving you the clearest picture that you want to make the decisions that you need to make to continue to compete in today's environment.
Yeah, Christy, I double down on that with the investor community too. And sorry, I had to be a little bit muted for a while. In Pennsylvania, we had a lovely snowstorm, but my dog does not like people shoveling their snow. So he was barking quite loudly there for a moment. But at the end of last year, I went up to a SIFMA conference and sat down and had a conversation with a few folks. And I think back to your point, Jeremy, I don't know that most of them want the sausage making, but they want what Christy just referred to, which is don't just give me the new data, give me the insights, help me understand what you've learned about it so that if I'm going to update any of my systems, processes, how I evaluate risk, et cetera, I feel confident that you've looked at this, you've done your homework, and you're giving me something usable. So whether that's a lender doing it or a vendor doing it, you know, my understanding is they're very open-minded and willing to look at change where it's necessary. But as per usual, and for anyone, you want to do the least amount of lift possible and make sure you have the most value possible. So where we can do that and offer that into the ecosystem, whether investor, originator, or otherwise, I think will be really critical for this year and beyond.
Yeah, that's really well said. Thank you for that takeaway, because I think that should be what everyone hears from Christy and Sasha, your summary today, which is you are pulling in external data. That is what you do as a lender. So don't mess it up when you pull it in. Don't try to do this alone. There is someone out there solving for it, and you got to get around the right table. And I think that era of we can figure it out, which was really a cool feature of our industry, the we'll figure it out attitude is very entrepreneurial, and I love it. I also would say there are people working on it for the whole industry now, and we need to be at that table, because if you're in a silo trying to solve for this, you're probably going to end up making some mistake on data structure, data formatting, or insights if you're working alone. And
Agreed.
It's a strange concept for an industry that competes so fiercely on marketing and sales, but we can't miss that. So I hope everyone will reach out to us. If this is a topic you want to hear more about, let us know. Sasha and I love having Christy back, so for sure we will do that anytime. And we will be digging into topics like this. Just a brief announcement about next week. We will have Mike Yu from Vesta. And going forward, Mike will be our every fourth Monday or every last Monday of the month. So we're kicking off January with Mike, but Mike will join us each month. And so get your technology and data and LOS questions ready. But we'll obviously talk AI anytime on Now Next Later. And reach out to us for topics and guests. We really appreciate you being here, Christy. And thank you, everyone, for joining us live.